Hello traders and good afternoon to you. In this video, I will be sharing with you in detail how I plan to take advantage of a potential trading opportunity as we head into the penultimate week of the month of June. Here on the daily time frame of the gbpcad, we can see how price has been bearish since the early part of March of this year. And if we connect the series of lower highs, we definitely have a bearish trend line that looks like this that you can see on your chart with that black line. We can see how price has been respecting that line since the month of March, and price continued to find lower lows and lower highs until we saw price tested 1.54800 area, after which we saw bullish engulfing candle that took price back into the trend line. Now, going into the new week, we are not sure how price is going to play out, as there is a possibility that price could continue to the downside from this trend line, that is respecting the trend line one more time, or probably price could break out of the trend line, do a retest of this trend line, and push price further to the upside. So how do we know where to go as we head into the new week? So let's scale down to a much lower time frame, let's say the 4 hours time frame, to see how price action has been playing out since in the last 2 weeks. Now, if we see what has been happening since the beginning of the month of June, we can see price went bearish before we saw that impulsive move to the upside, which tested the bearish trend line, and we can see how we had multiple rejection of this area in the later part of last week's trading session that could probably send price going to the downside. Considering the long-term bearish momentum on this pair, it's obviously advisable that we should take a selling opportunity. At least we should follow the trend of price action that has been playing out in the last 3 to 4 months. Now, going into the new week, the first thing we want to be doing is to have a key level that will guide our actions going forward. So if I bring out my line chart at this point and we try to connect an area that has been a supply and a demand zone in the past, we will have something like this. We have this area as being a demand zone here. We had a supply zone, we had supply, we had a demand zone around this area. The supply zone here is supply zone here. So with the information I just showed you on the screen, definitely we would understand how important that area has been in determining how price moves. So to make things clearer, we want to have our key levels sitting around, let's see how that plays out, around 1.59300, or let's see, let me see what, 59200, I guess. Hold on a second, let's do this first. Let's give it a gold color, and then let's bring out our candle chart and let's see if it aligns with what we're talking about. So we have it around here. So I think 1.59200 appears to be most appropriate for us to place our key level. So let's label it key level at 1.59200. So let's place it at the top on the right hand side of our screen. So we'll definitely have something like this, and let's place this, sorry. So with a key level sitting at 1.59200, we want to be using this area as our yardstick going into the new week. Instinct tells me to sell this pair, but we need further confirmations to guide our actions, as we might want to. There is a possibility that price could continue to the upside, that if we have a breakout retest of structure, and that can push price further up. The other scenario which I think is going to probably happen this week is the breakdown of the bearish trend of the key level, A retest of that key level, which also shares a confluence with the bearish trend line, then we look out for patterns on lower time frame that supports a trend continuation to the downside. So going into the new week, I want to be using the key level at 1.59200 as my yardstick going forward, and I want to be placing my entry right below the key level after the confirmation has been made. And what is our confirmation? Our confirmation is definitely a breakdown of key level, a retest of the key level on lower time frame, which also shares a confluence with the bearish trend line. Then we look for patterns on lower time frame that supports a trend continuation to the downside. So if you have this now, we have a selling position that looks more like this. We have entry point around that area. We have our selling position right below the key level, and we have our stop loss right above the bearish trend line with about, let's say, 60 to 70 pips stop loss. And now at this point, where will our take profit target be? From a long-term perspective, if we look at the previous impulse leg at this point, we have this impulse leg here. We have this impulse leg here. And if we run our Fibonacci retracement tool to the impulse leg, we can see that we should be expecting the culmination of a retracement phase within our golden zone area. And if that is going to be the case between 78.6% and the 68.1% of the previous impulse leg appears to be a new supply zone. So let's label this new supply zone. Put a question mark as we are not sure if that's going to be, as we're going to wait for the few hours of the new week to see how price plays out to now decide if we're actually going bearish. So we have our new supply zone around this area. So we want to be looking out for the culmination of this retracement move within this area. The culmination of this retracement move within this area where we're looking out for patterns that support a trend continuation to the downside. Now let me delete this retracement tool so that we can find where our take profit target will be. So if we project this impulse leg into the future, we have something like this. And to be more precise, we bring out our Fibonacci extension tool and run it through that impulse leg. Then we have a scenario where we aim at a minimum of 127.2% of the previous impulse leg, which definitely falls around 1.5300 area as our take profit target, hereby dovetailing to over 550 pips to catch on the gbpcad. And this is on a long-term perspective. Now, if we are going to look at a short-term perspective, since we are looking at what is going to happen during the new week we are going into, we can aim at the previous demand zone. If we look left, we can see that this area has at one point in time served as a demand zone in the past. And if we look closely into the structure, we have a neckline of what looks more like an inverse head and shoulder pattern. We can see we have an inverse head and shoulder pattern around here, and we saw a breakout of that structure, and there is a possibility that price could come back into the neckline where we'll be looking forward to the reversal pattern to send price breaking out of that bearish trend line to set the momentum for the buyers. So on the short term, we want to be aiming at a minimum of a take profit target at this point. That's around a 200 pips move. That is, we have our take profit target at 1.57, and if we do see a breakdown of this area and a retest of this area, then we could be adding more position to this trade. So for me on this GPP card, this is what I'm looking out for on the GPP card. If price continues to oscillate right below the key level at 1.59 and within the new supply zone where I see patterns that support a trend continuation to the downside, I definitely want to be going bearish either on a long term or short term perspective. You can follow me on my trading view account so you don't miss out on the regular updates I normally share in the comment section from time to time. Thank you for watching my video and I wish you a wonderful day. Bye.